following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night and a great week, folks. Accept others the way they are. You cannot change other people. To try to change them to fit what you want them to be is like trying to change a dog into a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We have the Dow Industrials up 149, Nasdaq up 30, S&P's up 13, gold contract down $8.40, trading at $12.27 an ounce. Silver off 9 cents at $17.84 an ounce. Platinum down 11 bucks at $9.99 an ounce. Copper up 2 pennies at $2.78 a pound. Light sweet crude off 94 cents. Trading $52.92 a barrel. Notes, 10-year note down 6 ticks, 124.19. 30-year bond down 16 ticks, 151.13. Both notes and bonds, folks, go topside last week, have volume, pulled it back today, light volume. They both want higher price, lower yield. King dollar up 154 ticks, trading at 100.945. The euro is at 105, and the yen is trading at 113.60. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You got another day, you got another high, you got another light volume high. Bottom line, you have volume contracting. We had volume contract on Friday from the prior week. On the weekly charts, if you want to see how this is laying out, it's getting really wild out here, folks. So on the weekly charts last week, we did 299 million. That was overtaken 384 million, and that was overtaking the high of 636 million. So check it out. So you have 636 million, your first high, which is 228.34. That was in December. We get over that high, and we did that on the week of the 27th of January with 374. Last week, you do 299, and today on the daily, okay, we're at 36 million right now, and this is about as anemic as you can get. And we did 66 million on Friday. So you continue higher price, light volume, and that means you can go higher. But guess what? This thing is stretched, and it's stretched in a huge way. NASDAQ Composite, NDX 100, the 3Qs, that's at 15 million right now. You're up 81 cents. On the daily, that's not bad. On the weeklies, that also had a big drop on the weekly volume last week. You did 73 million versus 99. So big number there. Small caps, the IWM right now is trading at 138. 36. It looks like the IWM is going to fail on price and volume as it tested its December 9th high. The December 9th high in the IWM is 138.82. We've made 139. You're going to have volume of 16 million. You're going into 34 million. So bottom line is that the small caps just can't get up and hold into higher price. Gold contract. What do we have with the gold contract? Gold contract trades to a low out here today, folks, of $12.20. Rejects lower price has lighter volume. You're at 1227 right now. Gold's still in an ABC structure on the way up, and I suspect we're gonna see this gold at the 1260, 1315, all the above. This is a nice setup out here today. You got into the lows. We did 167,000 contracts. That's going into 218,000 contracts. We reached a high last week with 222,000. So bottom line, it wants higher price. Silver, exact same setup in silver. Silver had a big day on Friday because what you did have is that you have the largest copper mine in the world on strike right now, and that does affect the price of silver because silver is a byproduct of the copper market. So that'll be saying less silver is coming out of the ground. Silver last week got to 1802. You're at 1801 today. Silver is making its way up to this $19.12 area, which is the high of November 9th. Now, notes. So, 10-year note, pretty amazing. That with the market up as it is, folks, right? The notes and bonds still refuse to back off. It's pretty amazing. So, notes today, 10-year note, 752,000 contracts. You're going into 1.8 million contracts, and it already rejected lower price. This note and bond market looks like notes want 127.07. Right now, we're at 124.19. Bonds, what do we got with the bond market? Same type of setup. And what I suspect we're going to see out here, Janet Yellen is going to be testifying on the semi-annual status of the monetary policy, the Fed's monetary policy tomorrow, starting at 10 o'clock. And it's a two-day deal. She's going to be talking. She's going to be testifying. Bottom line is, it looks to me like she is not going to be a hawk when you take a look at how these bonds are trading. So 30-year bond, a low today of 151. You're at 151.14. We have done 147,000 contracts. We were coming into 317,000 contracts. You can see the correlation there is pretty intense. You back down with dramatically lighter volume. That wants higher price, lower yield. King dollar. What do we have with King dollar? King dollar is trading at a price point of 100.945. King dollar is up on 22,000 contracts. That 22,000 contracts is coming into 61,000 contracts. King dollar's in a confirmed ABC structure on the way down with a price projection of 96.965. So bottom line is that you're coming up to, hey, we'll see how this shakes out as we get into the end of the day. Thus far, each and every day they love selling King dollar off in the afternoon. We hit 101.110. Right now, you're running out at 100.945. XAU, the HUI, what you have with the XAU and the HUI, this is rejecting a lower price also. And it's pretty intriguing because of the fact that you did have gold down pretty good this morning. The equities, however, just wouldn't back off. XAU right now, sideways move out here down 51 cents. Gold Bugs Index, same type of setup. Gold Bugs Index is down $1.84. You traded $216.97. Our phone number is 877-927-6648. Give us a call, folks. Coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is up 148. You get the Nasdaq up 32. S&Ps are up 13. If we take a look at the indice volume out here, this is what you have. We're at 500 million on NYSE, so that will come in about 750, 800. Inside the Nasdaq Composite, we are at 1.4, so that's got to come in 1.7, 1.8. Oil, let's go take a look at that oil market. So inside the oil market out here today, let's see what we got. You got light sweet crude. Here we are. So this contract, we're on the April contract, we're at $53.41. Anything that is inside 54.02 to 53.94 gets you into the lower range once again. Now, this is pretty amazing. The reason being is that what you had out here this morning is that you had Saudi Arabia come out and say that, let's see if I can get this for you. The CL, they were explaining just how compliant they were inside this reduction of oil from OPEC. But guess what? It didn't matter. So here it is right here. So Saudi Arabia told OPEC that it cut oil production by the most in more than 8 years, going beyond its obligations under a deal to balance the world markets. The kingdom reported that it reduced output by 717,600 barrels a day last month to 9.748 million barrels a day, according to the monthly report from the OPEC, Organization of Petroleum Exporting Countries. The group's own analysis, who compiled data from external sources, estimated that Saudi Arabia made a smaller 496,000 barrel a day cut in line with last year's supply agreement. Bottom line, the key here, folks, is that even with them saying that, hey, guess what, we are cutting down. In fact, that news release was saying that they cut more than was expected. Oil can't hold higher price. We've done 247,000 contracts out here. And, you know, we'll see exactly how deep it can get back into this lower range. Last Wednesday, you get down to 51.86, and that has volume down there at 51.86. So what we'll see there, number one, we'll see that at least get tested, but it looks to me like This is getting heavy up at these levels, and it looks like it wants to trade down into that $45 level. If we go over to the XLE and we actually take a look at the XLE, you'll see the XLE is down off its highs from 78.45. You come down to 70.65. You have nice volume down there, 16 million shares. You go higher Thursday with 9 million, Friday with 10 million, and today you get 6 million, 6.4. That's setting up to make a run down into the $66 level. Looks like it's setting up a nice ABC structure on the way down. If you take a look at the higher weighting structures, well, the highest weighting structures, you get ExxonMobil, XOM. ExxonMobil traded at 83 bucks. This had gone from 93 down to 81. Now you're doing a counter trend bounce. And I'd let this bounce a bit. I mean, this looks like it could bounce up to like 84 before it very well could turn and do a larger ABC structure on the way down. Chevron, which is the second largest weighting structure, has the same type of setup. Chevron is up 75 cents. That broke down hard on the 27th. It has some volume down there. It's trying to get back up into that gap, and I suspect we'll see whether it can make it, but it has dramatically lighter volume. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
I'm good. I'm good. We
Hey,
got a little bit more snow here.
I know. Did you? You know, we were looking at this one. The news was telling us you had like a whole bunch of snow, but then Tommy and I, when we were doing the program, we looked it up, and it didn't look like it was that bad up there.
Well, we got the first storm came in. We got about maybe a foot out of it, light fluffy snow, and then this last one, I think it was going to be a little bit more than we got. We got about 8 inches.
Oh, that's a lot. Okay, you got it. Yeah.
We're used to it.
February. I know, man. It's wicked.
We've been lucky. We've been lucky so far, but we'll see. We'll get to it.
So what are we going to look at today?
I'm looking at IPI. I took a position in it last week. It's got a little pop today. I'm just trying to maybe see if I can't get it up to the 260 level. Let's see what you think.
Let's take a look. So this is an Intrepid Potash. It's a nitrogen fertilizer stock. The low is 65 cents. The high is $3. Right now you're at 2. Oh, this is nice. Yeah, you got action. Okay. So watch this, folks. Okay, this takes off like a rocket ship November 30th. November 30th, it's $1.22. On December 8th, it's at 304. Then it gives it up, comes all the way back down to 175 with light volume. Test again with even lighter volume. Oh, nice setup, man. Okay, and now you get juice today. This is a good setup, man. Yeah. So you're up 29 cents. You're going into the high, and this is nice that you haven't hit it yet. The 241 swing high. Because you want to see the volume expand there. Now, tell me, how are you going to trade this? What are you going to do?
I was just looking for a quick trade.
Okay.
I like to get. I don't like to marry anything too long. I go in with some vengeance. I go in, quick and get out. Get out quick.
No, I'm with you. So, the reason I'm asking, this is the type of equity, folks, that when you're trading it, you have to have your sell in, because that's how this thing likes to trade. I would put a sell in, man. So,
yeah, I was going to put it up like somewhere around 260, 255, somewhere in there.
Yeah, I think you can. I think you can get a little bit more than that too. I mean, what I would do is this high volume swing. So you got, let's see. Oh, I see, 255. You're going to put underneath that. Okay. Yeah. That's cool. Yeah, I see what he's doing. So and that's the way to do it, man. Let someone else take you out, because, what happens, folks, is that this equity, percentage-wise. It can move like so many percent. And if you have the sell in, your probability gets much higher that you're going to get it, because it likes to give it back just as quick too.
Yeah. Right. Yeah. I don't want to get greedy with it. And if it comes back again, I'll hit it again.
And it will. That's what, it has a personality both ways. I mean, folks, when you look at this equity, this is a classic coming back testing on dramatically lighter volume to its strength. I mean, it's pretty amazing, actually. But yeah.
Right. Okay, Tom, that sounds good. Appreciate it.
Cooking, man. Have a great one. Have a safe one. And if we do go look at a few of those, let's see. So IPI. See if all these babies are moving. More than likely, they're all moving. IPI, interesting. I think MOS, right? Mosaic should be in there. So, yeah, so Mosaic is up $1.02. Yeah, and this has volume too. This is a good indication that that thing's going to go. So Mosaic is trading 33.88. The last high is 33.99. You had 9.6 million. It's going to need volume. If it holds price, you can probably get some action there too. Oh, this is a nice base. Okay, these nitrogen stocks, folks, you want to keep your eye on. The reason being is that this is a nice setup at the bottom. This has been basing out since September of 2015, and it is pushing into that supply line with volume. And what you have is that because it came down so fast, yeah, this is like the golds. Because it came down so fast, there's not going to be a lot of flack on the way up. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 144. You get the Nasdaq up 30. S&Ps are up 12.5. Let's go to Mike in Loveland, Colorado. Hey, Mike, what's going on?
Hey, Tom. I was calling to see if you could confirm that the IWM did, in fact, fail on price and volume today, and what are we looking for next?
Okay, so let's take a look at it. So the IWM reached a high today of 139.20. Right now, you're at 138.19, and you got 18 million shares. Yeah, it would have to close over 138.82, which I don't see it happening. And you can't bust them up. Bottom line, that is game once again for the bottom of this consolidation. And
So we want to see a down day with an expansion of volume, right?
That's correct.
Okay.
So
it might be the.
I'm sorry,
It
go ahead.
might be the first index of the bunch to give it up, wouldn't you say?
Well, it has been. This is what has happened, is that it has given it up. It has the volume at the lows. Then it comes right back again. I mean, that's the reality. It looks to me that the way that this market is setting up right now as we're coming into the close is that Janet Yellen's going to be speaking at 10 o'clock. So people are taking a few dollars off the table. Nothing heavy, but that's what it looks like. But it could accelerate a bit as we come in because, this is a 2-day meeting. And what the difference is on this here, folks, is that normally you have a Federal Reserve meeting. So the Fed has the meeting. The Fed has all the controls. She comes out and she does a news conference. So the controls, she'd have to answer the questions at the news conference. The difference here is that this is a 2-day meeting in Congress. And this is a semi-annual event. And so what ends up happening, she gives a state of what she thinks, what the Fed thinks is happening, right? Then Congress can question her for 2 days. So it's a long, drawn-out deal. There's plenty of folks that want to take over the Fed out there. So and then you get the trade wars, then you get the strong dollar, the weak dollar. There's going to be a lot of different questions that ask that, are going to throw some volatility inside this market, man. Particularly, are interest rates going to go up or not? And I don't think she's going to answer that explicitly. But right now, the Fed funds rate is saying there's only a 30% chance going up on March. There's a 48% chance in May. So I think that's what we're looking at right now. So we'll see where this shakes out.
Thanks, Tom.
Okay, man. Have a great one. Have a safe one. If we do go over to the banking sector, the XLF, what you're going to have inside the banking sector, folks, is that the banking sector got over its highs today. You're still over them. The XLF is at $24.03. 23.87 is the number. Now, it's over in light volume, but bottom line, it's over them. So that would have to get back down into this 23.87 level. Inside the NDX 100, well, what's intriguing inside the NASDAQ, the composite right now, is that the IBB, which has a good weighting structure inside the composite, that's coming right up and trying to test the 287.17 area. It got to 287.01. It would have been sweet if that baby had got up there today. 286.69. Well, actually, yeah, I can make the case. You can make the case. The downdraft started at 286.69. It did get to 287.01. That downdraft had 5.6 million, and we've only done 650,000. So if that baby wants to give it up once again, that's going to put some heat on the composite. Now, this certainly, it likes the bottom end of this consolidation right now in the IBB is 261. Let me just go see pull up a couple of the highly equities with high weighting structures. So Biogen is over its high of 277. So that's saying that can go to 284. So that has more juice in it. Amgen is just going sideways. That's not telling us much. Celgene is going sideways too. So it looks to me that the IBB, it wouldn't be ready to pull the trigger on the downside until Biogen gets up and gives us information at the gap, which is 284.51, because it's taken over the swing point from the 10th of January out here this morning. We go back. Let's go back to the financials for a second. So you get J.P. Morgan, 88.16. Oh, this is going to be pretty cool. This is going to be wild. So, man, when these come to the pennies, it just blows my mind. So, J.P. Morgan has a high volume swing high at $88.17. 28.2 million shares. Well, it has to be tested. It's tested today. Now, this is going to be really intriguing if, in fact, this does not close over $88.18, because we're at $88.19. And the reason is this, because that is when they come out with their numbers. And when they did, it gapped down to 83 with 30 million shares. So the correlation would be, that's the consolidation. Top of the consolidation is 88.17. Bottom of the consolidation is 83.28. You know, so J.P. Morgan, where that closes today, is going to be a big one. And then, you know, we'll see. It's 3 pennies over it right now. Goldman Sachs, let's go take a look at Goldman Sachs. Goldman Sachs also right at the highs. And we're going to the same place, too, I believe. So we're 246.46. The high today is 247.48. Oh, this is... And the high that it's shooting for, folks, is 247.77. So this hasn't got there yet. And you got to let it test it. That's the bottom line. This consolidation's been out there a long time. You got to let it test it. Bank of America, BAC, also testing the highs. That's 23.40. You're at 23.42 right now. Hey, this is going to be a good day trying to figure out how subtle these things are. Can they get up and over them? They're all and the XLF stocks, they certainly are not going to get the volume. The volume is just not there. If we go over to that IWM again for a second, it looks like they're selling this IWM off. Yeah, they are. So the IWM, we're at 138.18 right now, and we were just talking with Mike. It was already at 138.36. So this thing's closing up the whole opening. This had gapped open earlier this morning, folks, and you're still going to have dramatically lighter volume. Some of the higher volume stocks out here today in the slow volume market. You have AK Steel's up 34 cents. You get Cliffs National up 84. NVIDIA is down $4.73. That thing's getting hammered after going to the moon. U.S. Steel is up $2.14. And let's just look at NVIDIA for a second. So NVIDIA is at 108. Now that's coming off the high with volume. Your lowest swing point is 99.11. It's Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now up 148. NASDAQ up 29. S&P's up 13. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And you're talking about a pop intraday. So Popeye's Louisiana Kitchen, which own and operate Popeye's Chicken and Biscuits. Bottom line is that that's just got an 8-point pop intraday, just as we're on the air right now. So the stock was trading at, look at this. So the stock was trading, let's see, 20 minutes ago it was trading at $65.45. Now it's at $73.96. And let's see what they have to say. Okay. This is from a Reuters news story. Restaurant brands Popeyes haven't yet agreed on a deal price, and there's no certainty talks will continue, Reuters said, citing people familiar. So let's see. Restaurant brands. QSR has also been considering acquisitions of other companies. One of the people said Popeyes is up as much as 13% intraday, the most since 2014. Popeyes declined comment. Let's see, QSR, is that? So this is Restaurant Brands International. They operate Burger King and Tim Hortons. That's trading $53.68. And that's the market evidently like that. Well, there's not much the market doesn't like these days, folks. That's the other side of it. This is going to get intriguing, though. Intraday, seeing pops like this come out, that's pretty intense pop, no doubt about it. Let's go back to, I want to go back to PL. I just want to see what type of money Popeyes takes in. Let's see first. So Popeyes has 2,100 employees. They take in $250 million. Yeah, take in a lot of money, man. Pretty amazing. 63 million per quarter. Out of that, 144 million for the year. For the year, we're talking at 268. So out of that, franchisees take in 144 million. Company takes in 109 million. Never realized that Popeyes was that big. Let's go over and we take a look at the good old monster out here, the retail monster, Amazon. Amazon's going after its high once again. The high that we're talking about in Amazon is 847.21. You're at 837 right now. And guess what? This is pushing on the swing with volume. Today you have 3.6 million. You're going into 3.5, and you have a low volume market out here today. So that's saying that Amazon does want to whack that and basically at least test it. We go take a look at Google, different animal. So Google is coming into its downdraft with dramatically lighter volume. Google was done 923,000 versus 3.2 million on the way down. Okay, so Google's not, that setup isn't there for higher price to stick. Facebook is at highs. Facebook is trading 133.99. You get the spike high from earnings of 135.49. Microsoft, MSFT. Microsoft is at 64.65. That looks like it just wants to test its high. And if we go to good old Apple and we take a look at Apple, Apple is trading up $1.40. You're at 133. And this is, oh, this is good. Okay, so, man, they're all waiting for each other. So Apple is right at its highs. The high of Apple, 134.54. We've hit 133.82. This is going to need some big juice. But so check it out. So Apple has a high, which was May of 2015 on a weekly basis. 420 million shares. Last week, you did 136 million. They're going to be unloading this in a big way. This is going to be pretty cool watching this thing shake out. Because what you did have with Apple, you actually had a triple top. The first top came in the week of the 27th of February, 133.60 at 368 million. The next top came in May 1st, 134.53, 420 million. So first top, 368, second top, 420. Third top came in July of that same year, 344 million. So 344 was testing 420, was testing 380, and you did 136. That's pretty cool, man. You'd want to let it hit it first. You know, you want that test to occur, because when you get that close to highs, number one, you can get right underneath it, and until that test actually comes in, you know, it's telling you something if it's coming in there with light volume or heavy volume. It's a much better test if, in fact, it actually hits the number. If we go take a look at AMAT for one of the tigers out here, so this is Applied Materials. The low for the year is $16. The high is $35. This has been a straight line move up. Let's see. That's for sure. Put this on a monthly and see what we got. Okay, so yeah, this is, you know, there's not much here. This equity certainly is not backing off. It's not even close. And it's been up on light volume for a long period of time. Let me just see. It's not an ABC up. You know, AMAT, folks, you know, I used to trade AMAT so much in the 90s. This equity from 1998 to 2000 just continued to do ABC structures on the way up. And then the first time that it didn't, it was almost right after that, the whole market fell apart. It was pretty amazing. Yeah, this is up on anemic volume. If you own this thing, man, I would put a stop in every single day when you're trading it, because you're at 35.47. Looks to me like 32.17 would be game. I believe they already come out with their numbers. Oh, no, they're coming out the 15th. Oh, interesting. Yeah, I would not go into, if you're long, I would not go into numbers on the 15th with that. Now, what will happen, this is what's pretty cool about AMAT, folks. What happens with AMAT numbers, if in fact the semiconductor business is going to continue being huge, they will have a huge backlog. That's how AMAT works. And it'd be hundreds of millions, too. The bottom line is that they make the machines that go inside the big fabrication, you know, to make all the chips. And when you basically get down to the numbers in a fundamental way inside AMAT, that's what these analysts are going to be looking for. They're going to be looking for what is the backlog, how big is the backlog, and has the backlog expanded or gone down? We go over to Tesla. Yeah, Tesla was in a confirmed ABC structure on the way up, and then now it's decided to do another one. You know, Tesla was a clean break. It was a clean break top side on the January 4th. Took the B out, took it out with volume, did the whole deal, got up to 258. Bottom line is that you had the aspect of 253 was the first one. It just took out another B point. Smaller ABC structure up, but it's going. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. If we go take a look at the KRE. So the KRE, folks, is the Regional Bank Index. This is the ETF for the regional banks versus the XLF, which is the large international bank. So this index here also testing its high up here. We got to a price point today of $57.14. The high it's testing, we're right at it. It's pretty amazing. It's 56.73. We'll see whether it's going to hold. It's 5.5 million shares versus 8.1. What is pretty wild about the regionals, too, is this. So check this out. This is going to get wild watching how this shakes out, because what the regionals just did is that the regionals are trying to, number one, get out from under the capital rules, the capital rules that were put in place in the financial overhaul, the Dodd-Frank deal. And what they're trying to do, and this would be, both of these would affect all of us. The second one would affect us in a huge way. And what it is, right now, folks, when we use a credit card, the merchants get charged. When we use a debit card, the charge is dramatically less because it's like that's all people use now is cash. Well, the bottom line is that there's a cap on the debit cards. because they are like cash. Well, they are going to start lobbying. They just started lobbying right now to get rid of that fee, that cap fee. And if that happens, which in all probability, their odds are probably pretty good that cap fee will go, guess what? We're all going to be paying more money for everything and anything that we're buying. Because the difference right now is pretty dramatic. The difference is, goes from about 0.6 of 1 to basically 2.3 to 3.4% using a credit card for merchants. So the bottom line, try to get rules changed for anything personally, folks, and it's not going to happen. But guess what? The banks, the banks are going to, looks like they're going to be let loose again. In this particular case, the amazing part is that that you have a downdraft, the banks get wiped out, you and I bail the banks out, they claim that they never did anything wrong, they paid billions and billions of dollars, but yet still no one went to jail, they admitted frauds, and now guess what? It's going to be carte blanche again. Okay? Stay on top of it, folks, because guess what? If you don't stay on top of it, things can change. And, when they change, power just begets more power. That's the bottom line, okay? If you think for a second that there's not a... you just got to wrap your head around power a bit. If you wrap your head around power, you'll realize that power wants to grab all power on a continual basis. And there's no such thing as someone has a little power, I want that power too. That's just how power works. And inside the banking structure, it's a big problem. It's particularly a big problem for us because they're going to be let loose again. And what has happened inside the transaction business, it's a big deal because people don't use cash anymore. So picture whatever the price is, add 3% to it. And when you add 3% to it, though, if you do that on a continual basis, on a few transactions, you're going to see how much more money you're paying on a continual basis just because you and I and all of us have allowed the aspect of plastic to overcome and take everything over. And all that is middlemen taking money out on a continual basis, penny, penny, penny at a time. But guess what? A penny at a time adds up to billions and billions of dollars. You stay right there, folks. We'll be coming back with some numbers for you. Dow right now, up 136. NASDAQ up 26. S&P's up 12. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad.
Good.
In fact, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother. That's so cool.
Right, yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting.
Yeah.
But as far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks, and a great week. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow Industrials up 142, NASDAQ up 29, S&P's up 13, gold contract down $9, trading at $1,226 an ounce. Silver down 11 cents, $17.81 an ounce. Platinum down 12 bucks at $9.99 an ounce. Copper up 2 pennies at $2.78 a pound. Light sweet crude down 97 cents, trading at $52.89 a barrel. Now, the oil market, folks, just can't handle the higher range. There's a couple different ranges it's in. It keeps dipping into the lower range, and that is with Saudi Arabia saying that they actually cut back even more in the past month. Bottom line, oil wants lower price. Notes, 10-year note down 5 ticks, 124.19. 30-year bond down 13 ticks, 151.16. Both notes and bonds went higher last week, had volume. Today, even with the indices hitting all-time highs, even with actually Apple, folks, has a $700 billion market cap right now, all-time market cap. Bottom line, bonds will not back off. Bonds want higher price, and that equals lower yield. King dollar up 189 ticks, trading at 100.980. Euro is trading at 105.97, and the yen is at 113.69. Our phone number is 877-927-6648. Give us a call, folks. We'll know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You're up $1.17 when you look at the SPY. You've done 49 million shares. Bottom line, you're at higher price. You have light volume, but you can still go higher. Qs, NDX 100. What do you have with the Qs? Same type of setup in the Qs. Qs did 18 million shares out here. That's what we've been doing at those highs anyway. What has happened, and I'll go over this on the weekly basis, the weeklies from last week to the prior weeks, it died on the vine dramatically. But bottom line, we went to higher price out here today. Now, small caps failed on price and volume. The small caps, bottom line, are weak. Small caps were tested the high today of December 9th. That high was $138.82. We made it to $139. You did volume of 22 million versus 34 million. So bottom line, small caps, bottom line, couldn't bust them up. Now the small caps are going to try to get down into the price point of 133.17, which is the bottom of this consolidation that it's trading in. Gold contract. What do we have with gold? Gold also is set up to go to higher price. It's a confirmed ABC structure on the way up. What you had out here today, you got down to a price point of $12.20 an ounce. You did 170,000 contracts, which was going into 200 and let's get this in front of me. Okay, 232,000 contracts. And rejected lower price, has lighter volume, all of the above. This gold contract wants to get up into, I suspect, the $1,315 level. Silver is the exact same type of setup, what you have with the silver market. Silver got a nice pickup last Friday, and that pickup, I suspect, had a lot to do with also is that the largest copper mine in the world, folks, is closed. They're on strike right there. And what does happen is that the silver is a byproduct of copper. And so I suspect that push there had to do with there's going to be less silver getting out of the ground. Silver right now is trading at $17.81. That looks like it wants to get up into the $19.12 level. The XAU, the HUI, they both went sideways today, even when gold was down, $15, $12. The XAU is trading at $94.51. That is building cause to get up into this $101 area. The Gold Bugs Index is trading at 216. That little baby is building cause to get up into the 249 area. 225. The Gold Bugs Index hit the 222.98 last week, and that had volume as it was going into it. So I expect what we're going to see with the Gold Bugs Index, that wants to get up into that 250 area. Notes and bonds. This is the remarkable part about this market right now. Well, there's a lot of remarkable parts, but as to consistency, that these continue to want higher price, lower yield. We only did 773,000 contracts today in the 10-year. That was going into 1.8 million contracts. It rejected lower price. This wants higher price. And 127.07, I suspect that's where it wants to run to. 30-year, same type of setup. 30-year out here today did 153,000 contracts. That was going into 282,000. There's no sellers. That's the bottom line. Rejected lower price, lighter volume. This 30-year wants to get up to 155.13. And what we are going to have is that the market tomorrow, folks, it's going to be Janet Yellen that's going to be basically putting some volatility into the market, as will Congress. Okay, she's doing her semi-annual monetary report to Congress. It's a 2-day event. It starts at 10 o'clock in the morning. The beginning of that event, she'll just make a speech, and then she will be taking questions all day tomorrow and all day on Wednesday. So I expect that's going to put some juice into this market. King dollar. King dollar today was up 184 ticks. You're at 100.975. You did 23,000 contracts. Bottom line is that you're coming into 61,000 contracts, and King dollar is an ABC structure on the way down. It's a confirmed ABC structure on the way down. Now, what has happened here is that this is going to turn into a complex one, and what that specifically means is this: is that your C point on this is 101.015. We got to 101.110, and then it gave it up again. It gave it up in spades. Bottom line, that just makes it a complex one. You still have a price projection here of that ABC structure on the way down of 96.965. This is Tom O'Brien. This is TFNN. Stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's take a look. So Apple shares hit a record on optimism. The next iPhone will drive a resurgence in sales and help the company services business grow. The stock climbed to $133.29 at the close. The increase in value, it increased the value to Apple to $699 billion, making it the world's most highly capitalized company. Google is valued at $573. Pretty intense. So let's go over and take a look at that. So Apple hit $133.82 today. And $134.54 is the high. So we had done this the prior hour, but this is the numbers that you want to look at. So this is going to be pretty cool watching this shake out this week, folks, and this is why. Your high up here has 420 million shares traded. Last week, we got up into that high with 136 million. So check it out, 136 million versus 420, right? So that distribution line up there is a monster, okay? And if, in fact, you close Friday under the 134.54 after already had hit it, you want to hit it first. So, bottom line, I suspect tomorrow morning we'll at least tag it. That's going to be a big heads up. Can it blow it away, or, in fact, it's going to be a failure? Because if you get a failure, and we get a failure with the type of volume characteristic from last week, that's about as big as you can get. Meaning you're coming up with 136 million versus 420. And what we had out here today did 22 million shares today. So you could actually get even less than the 136 million of last week. Now, what we will have is that you have Yellen speaking tomorrow and the next day, and then what we also have is that you have option expiration on Friday. So there'll be some volume coming this Friday with option expiration. We go over and we take a look at the Google. Google is just doing a counter trend bounce. That's the way that's set up. Google came down hard when it came out with its numbers. Got from went from 841 down to 790 in 3 days. It's making its way back up into that gap. Looks like 820.44 is the number. And we hit 820.59 today. You did that with 1.1 million shares versus 2.2 million shares. We go back to Apple. I just want to go back to Apple for 1 second. So you got a 700 billion market cap. It's actually $699,311,000,000. Pretty intense. And, okay, 1 second there. Yes. I'm just curious as to what they've been taking in. Okay, so Apple takes in, right now, last quarter they took in $78.4 billion. This quarter they expect $52 billion. So it's the way that Apple is set up, of course, is that they use that holiday quarter. They call that their first quarter. So their first quarter must be October, November, and December. That is their biggest quarter each and every year. This quarter here, they're looking to take in $52 billion. Next quarter, $45. That's the summer quarter. Then $51. Then next year, they're upping that to $82. So it's interesting. So you get a market cap that's almost twice, well, 2.3 times their gross revenue. Big numbers. No two ways about that. That is some big numbers. If we do go take a look at the Russell, the actual indice, what you're going to see inside the Russell also couldn't handle the top. We got to 1398, and you closed. Look at this. This is wicked. So you got to 1398.601. 1392.711 was the high, the last high in December, and we closed at 1392.378. It's going to be intriguing to see if, in fact, the small caps get juice once again on the way down, because thus far, what the small caps do have is this: is that if we take a channel line and you put the tops and the bottoms, well, here, let me do the IWM because it's a little bit easier and everyone has the IWM. So the correlation, if you put how it's traded at the highs of this consolidation versus the lows, what you're going to see. Okay, so your first high out here in the small caps, we had done 34 million shares. Then we came down, so that high is generated 138. We came down to 135, you did 45 million. So one high, you get a high of 34, you come down with 45. We test that high with 31, you come down with 34. You test another high with 34, you come down with 42. You test another high. Now, this was a wicked anemic one. With 29, that was on the 25th of January, and then you come down with 32. Now we're up at a high with 22. So 22 million today, tested the 34 million, and it failed. So bottom line is that we'll see how this shakes out as it tries to get the lower price. The Qs, the diamonds, I mean, they're pretty far away from where they basically broke out from, depending what breakout you want to talk about. You know, the Qs, the last swing high in the Qs was 125.92. The one prior to that gets you down to 123. So that definitely would have to pull back with big volume first in order to basically get some destruction going. Diamonds, same way. You know, the diamonds, you're at 204.20, and 199.83 is the number. Now, yes, it took it out with light volume, but bottom line, that higher price is pretty intense. We go take a look at the GLD, the Street Tracks Trust. What you're going to see with the Street Tracks Trust is that this also is rejected lower price with lighter volume. We're at $116.80. You come back into the 116 area today. I rejected that price. We're at 116.80 right now. 7.3 million versus 9.4 million. You know, so the GLD still wants higher price. It looks like the GLD wants to get up into this 124 area. Now, it does get intriguing about this on a longer term basis. See how the GLD right now is at 116.80. Now, because this has been an ETF for so long, you're going to see that this was always trading at it was trying to hold the price of gold. Okay, so bottom line, meaning 10% of the price of gold. Well, what has happened is that because this has been out for now probably 12 years, let me just see if I can find it. Inception date, there it is. Okay, cool. The inception date was November 18th of 04. The expense ratio is 0.4%. So 0.4% every year gets shaved off this price, and that's why you see gold trading at 1226, yet the GLD is only at 116, where if that was the beginning, that would be 126. Stay right there, folks. Coming right back.
To tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Boeing closed up $1.80. You had Caterpillar up $2.19. Citigroup was up $1.32. You had General Motors up 35 cents. Walmart was down 25. JP Morgan was up $1.15. 3M was up $2. Inside the Dow Industrials, the strength out here. Well, first off, let's go take a look at the percentages, because as you get to higher numbers, bottom line is that you don't have to go up much percentage in order to generate higher numbers. You can see this just in the Dow. The Dow is up 142 points. That's 0.7%. S&Ps were up 0.5, and the NASDAQ was up 0.5. Inside the Dow Industrials out here today, the strength was Caterpillar. That was up 2.2%. $2.27. Goldman was up 1.4%. Cisco was up 1.4%. And J.P. Morgan was up 1.3%. Verizon was taken away from it. That was down 0.8. Walmart was down 0.3. Nike was down 0.2. And Big Mac was off 0.2. If we go back over to let's go back over to Goldman, because I want to look at this XLF and see if it actually made it. So Goldman made it to 247.48 out here. And 247.77 is the high. It still hasn't tested yet. 247.77. Just missed it. Okay. The XLF, let's just see how that end up. So the XLF 2384, it made it. Okay, so the XLF is at a new high. Volume's not there, but guess what? It's at a new high, so it can go higher. JP Morgan, JPM, let's take a look at JP Morgan. And JP Morgan had volume come into it. This is interesting. So JP Morgan, it was going into a high volume spike of $88.17. Oh, this is going to be wild watching this. Okay, so watch this. It came in with 18 million shares versus 28 million. And it closed under the 88.17. So that is a failure on price and volume. Let me see how this closed in. Because it got some good volume in at the close. But you know what? That's a sell. Wow, look at that. That's intense. Here, I'll show you something intense here, folks. So at the sell in JP Morgan today, you're going to see 1.7 million shares. So picture, you did 18.4 million shares today. 1.7 million was done at the close at a lower price. And my speculation is that is a sell. Now, the reason that the speculation is a sell is this. So picture that you're coming in with a buy of 1.7 million shares. Well, if you were pushing a buy in there at the close, you'd have higher price versus lower price. And what happens, this ticked down from $88.32 to $88.15. And then if we put this up, I'll show you the trade. Yeah, there's the trade right there. So actually, it's more than that. So check this out. This is pretty cool. There was, at $88.15, there was 4.1 million shares done. So that's almost 20%. It's 20% of the whole trade today was done on the close. Let me go look. I want to look at Goldman too. 1 second here. Let's see what we got here. Just to see if someone's unloading. Yeah, interesting. It happened to Goldman too. So Goldman, the difference is Goldman hadn't made that high. Meaning it just missed it a few pennies, but the test wasn't there. So with Goldman Sachs, that did 102,000 shares at the close. And we did JP Morgan. Let's go do Bank of America. So Bank of America did, this had some big ones. Okay, this is intense. Bank of America did 11, 12, 13. Someone's unloading here. So check this out. This is going to be wild. Okay, so Bank of America, you got to $23.54. Closed at $23.40. Oh man, this is a failure on price and volume. Now watch this though. This is by 1 penny. So the high of Bank of America is $23.39. It hit $23.54. Closed at $23.40. Oh, it just ticked up to 40. Okay, so it's there. But bottom line is that it did 105 million shares versus 162, and what you did have at the close is someone is pouring stock on here. I mean, they're moving this thing out too, because the same type of situation took place, meaning that you went from 23.48 down to 23.39. You know, still liquid, no doubt about that. But you can see that someone was buying that when they were buying that at a price point of about 10 cents cheaper coming into the close. If we go take a look at Citigroup, not as intense, but Citigroup basically has been and is weaker than those other indices. Commodities out here, this is where the commodity market stood out here today. We're going to have, let's see, Wednesday you get oil numbers, Thursday we get natural gas numbers. Natural gas out here today gave it up again in spades, and that's even with the whole Northeast getting hammered out here. So natural gas was down 2.7%. That's trading at 303, and that looks like it's making its way back to 277, which, bottom line is that when you look at February 13th, a month from now, you're March 13th, and guess what? Right across the country, the weather's going to be better. You had fuel oil down 2.2%. That's trading at $1.63 a gallon. Unleaded gas down 2%. That's trading at $1.75 a gallon. Crude is at $53.40. Now, we were talking about crude. The number to keep your eye on in this contract here, folks, and we're dealing with the April contract, is $54. You get under the $54 level, that sets you up inside the lower range. That it can get all the way get down to 45. And this has been dealing with this since January 10th. Last Wednesday we came right down to the highs of the OPEC meeting, which was the 30th of November. And that was $52.32 in this contract. So bottom line, oil also looks like it wants lower price. The gold contract was off 0.7%. Let's see, silver was down 0.6, no big deal inside of both of those. Pullback, but the equities themselves just didn't pull back. If we go over and we take a look at that dollar index, well, here, let's go to the yen first. So the yen, the correlation, yen gold is when you get bottom line weaker yen, meaning that we're at 113. If we just went from a price point of 111 to 113, you get weaker yen. That's when the gold contract likes going lower. You get stronger yen, that contract goes higher, and it goes higher very quickly. The correlation's pretty direct. Looking at the yen right here, the yen bounced the last couple days. Doesn't look to me like you have real juice behind this, and I expect what you're going to see, just as we came on November 3rd, the yen was trading at 102. By December 14th, it was at 118. This thing is moving back just as quick. I expect that you're going to see this yen make its way back to that 105 to 102 level. You stay right there, folks. We come right back. Dow Industrials finished up 142, NASDAQ up 29, S&P's up 14. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at the platinum market. So if we take a look at the PPLT, the PPLT is the ETF for the platinum market. The low out here is 85. The high is 113. You're at $95.72 right now. So let's take a look. So put this on a weekly. Okay, so you're building costs to get over this 98 mark. Actually, I'm going to bring the futures contract up. So platinum, and we're going to bring up the April contract. So the April contract's trading at 1,001. It was down $10 today. You did 10,000 contracts. Oh, this is interesting. So this came down with some juice on Friday. So on Friday, you came down with 20,000 contracts. You're going into 21,000. Today, this is good for the platinum. You came down on 10,000. It would have been nice if it actually got to 993. I got to 995.50. It's going to need more volume to basically break down. It doesn't look to me like it's breaking down. It looks like it's actually trying to get up and over the 1,026. We hit 1,032 last week, because if this gets over 1,026, folks, and gets away from that price, you will see, it's 1,026 with 30 bucks. It's 1,050. Let me see what that is. Yeah, it looks like 1,072 is game. That's how that kind of is set up right now. Yeah, we'll see where that shakes out, but that's how that's set up. If we go and we take a look at the euro out here is trading at 105. Now this made a run off the bottom of 103. You're coming into this. There's quite a bit of support. We're at 105.98, and there's quite a bit of support at 105.98 to 105.50. So this is going to be pretty. This is going to be an area that's going to be important for the euro to hold, or it will run back all the way to the lows. And I expect what you're going to see out here is that we're going to see the aspect of what Janet Yellen has to say, and has to say specifically about where we are in the cycle, where the Fed is in the raising of interest rates. And what I expect you are going to see come up here is more than likely there will be a few questions too about the amount of buyers for our bonds, because what you have had is that you've had China and Japan, which are two of the largest owners of our bonds. You had them, selling, the last few months. Now, that being said, there was plenty of buying in the aspect of domestic buying. So it's not a one-way street. So the 10-year yield. Let me just look how this thing. Yeah. So, but I suspect you're gonna get those questions because there was a article out in Bloomberg today, and those numbers get published as to how much buying and or selling was taking place. Inside that article, what they had is that they felt that the selling of that had to do with the aspect of Japan and China basically trying to make sure that their currency wasn't going down as fast. And that's how they were managing that trade. So we'll see where that whole thing shakes out. But I expect that there's no doubt that there's going to be volatility in this market when those questions, come across. We go overseas and we take a look at the Nikkei. So as the yen, bottom line, got weaker last couple of days. Yeah, the Nikkei right now is trading at 19,459. This is approaching its highs. And yeah, it looks like it's going to get tested. So 19,594, which is $100 higher. That baby I can expect will get tested tonight. And that high has 1.6 billion shares traded. We did 1.1 billion last night. The prior night did 1.4. So that's going to be a big test out here tonight. And we go to the FTSE in the UK. The UK out here. UK trading at 72.78. Now that is just coming into the downdraft from the 17th of January. So that doesn't look to me like it's going to basically hold a higher price. The DAX in Germany, that likes to trade just like the NASDAQ. DAX in Germany today was up $107. This little baby, let's see what kind of volume she has. Friday she was pushing with volume. Well, the high has only 93 million, and you were actually pushing with 79 million and 110. You were pushing with 110 last week. 79 Friday night. I won't get tonight's volume until about 8 o'clock tonight. We pull this back just a little bit more. Yeah, this is going after its highs from 2000, and I guess what the difference is, that NASDAQ's at highs. This isn't there yet, because their high is 500 points higher. We're at 11,774. If we go into the commercial real estate market, you go into the Simon Property Group. This is the largest mall owner in the world. Well, in the United States, it may be the world. $181 it's trading at. Now this baby here, these malls are having a tough trouble. I don't know what they're going to fill up malls with, folks. They got to figure something out. So this is off the high of 229, and the bottom of this consolidation is 173. So this doesn't look like to me it's going anywhere. And this had quite a run. There's no doubt about it. But that commercial property, just think whether, first you had the Kmarts of the world and, going out of business. Of course, Sears is having a hard time. But when you start talking Macy's, you start talking a whole different ballgame. You get those stores start going out. What that sets up a lot of high-end malls that lose an anchor. And how do you fill a Macy's? Let's go to Mike in Cheyenne, Wyoming. Hey, Mike, what's going on?
Hey, Tom, how you been?
I'm doing great, man. Yourself?
Doing fantastic today.
Cool, man.
Hey, Tom, I got a question for you. I was looking at a ETF to invest in, JKI.
Okay.
And I was wondering what would be a good entry point.
Okay, we'll take a look at it as soon as we get back.
Sure.
You stay right there, folks. We'll be coming right back. So we're going to be looking at the JKI. This is a Morningstar exchange-traded fund. Let's see. The results correspond to price and yield performance of the mid-cap value index. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with Mike from Cheyenne, and we're talking about the JKI, which is a mid-cap Morningstar fund. You know, I wouldn't be biting on this right now. I mean, I know, you know, I'm sure you know this is at highs, right? We just went 129 to 149.
Right.
What's intriguing here, if you go over to the MDY, right, and this is what I'd keep my eye on this too. What you're going to see is this. So the MDY is the same. That's the S&P mid-cap, right? So I suspect a lot of these same equities that are in MDY are going to be in the JKI.
Okay.
And what I would do is this. So we're at 313.71. The 309.59. That's what the mid-cap took out, and it took it out on Thursday. Now, that being said, Thursday did 1.6 million shares. Friday we did 1.1, and today we did 820,000. So you can see this dying on the vine. I just give it a bit, and, you know, I'd wait until this thing backs down. Because it's not, my point here, Mike, is it's not an ABC up, okay? Because it took out the B point, but guess what? The volume is bad. So that is saying we'll back down the other side. And then, you know, you back down the other side and you get to 301 that says light volume, that would be the buy. And if we go over to the JKI, you know, the bottom of that consolidation would be 144. You're at 149 right now.
Right.
You'll be able to gauge the JKI much better by looking at the MDY because there's so much volume in the MDY. Like this one here is only 16,000. Do you know what I mean? Because I believe it's the same. It's just to mimic it. Mid-cap value index. Index measures promise of companies mid-cap. Yeah, it's the mid-cap section. So the MDY is what you want to trade that off, man.
Okay.
Just have a little patience. You'll be good.
Fantastic. Thanks a lot for your help, Tom.
Thanks, man. Have a great one. Have a safe one. And there's no doubt, folks, bottom line, the stretch is out here, and it's out here in an amazing way. If you're going to basically look to buy into this thing, just, please wait for a pullback. Because on the pullback, what you're going to be looking for is that you get a pullback, you have light volume, it goes down to the bottom of the range, okay? That's a setup that's saying it does go higher. Thus far, every pullback that we've got in this consolidation, you have the volume there. Now, there's no doubt that the NASDAQ and the S&P, NASDAQ and the Dow, and the S&P, they're all away from that consolidation because even the S&P, the SPY is, it's only 4 points away, actually. The SPY, we're 232, 228, but the characteristics, so at the beginning of the program, we were talking about the volumes. What you have is this, is that the weekly volumes on all the indices were dramatically lighter last week. Yes, you went higher, but the amount of buyers that are out here are very much smaller. What I do expect you're going to see out here is that with Janet Yellen talking, there's going to be some action. It was kind of cool, actually. Someone in the Tigers Den just put up there's a story out here that bond traders fear Janet Yellen is planning a St. Valentine's Day massacre. This is a Market Watch article. I haven't read it yet. The bond market's not saying that, folks. The bond market's saying it wants higher price. The equity market, I could see, is that Janet Yellen is ready for a massacre, not the bond market, because the bond market continues to go higher with volume and pull back with lighter volume, just the opposite of the broad indices. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.